Welcome back to our intermediate financial accounting class. In our last few segments, we've been talking about cash flows, and we've spent most of our time talking about it conceptually. Why cash is important, what FASB wants us to accomplish with the statement of cash flows, what information we can glean from the statement of cash flows. And then we finally started talking about actually building one. We talked about the difference between the simplified versions that you've learned in earlier accounting classes and an actual statement of cash flows. And then we went through the set of 8 steps that will let us build our full statement of cash flows. And the last thing we did to wrap up our last segment was we walked through the basic template for Avery Arrowheads, showed you how that template is set up so that you can keep up with us as we move through this next section. I say us, but I really mean me, because I don't have a mouse in my pocket or my children helping me or anything. It's just me and you. So I guess I should say so that you can keep up with me. And then once we had gone through the template, we did our very first step, which was to determine what the change in cash was for the year. And we got an exact dollar amount for Avery Arrowheads. Our goal is to make sure that we show a change of $599,000, a decrease from year 5 to year 6. So with that target in mind, we can now continue on with our method. And our next step is to build a series of worksheets, 3 of them, one for each section of our statement of cash flows. So you can see I've done some of this work for you in the template that you've got. I've even filled in some numbers, but what we're looking at is our operating worksheet. We're going to start with accruals over here on the left. We're going to put in the changing cash here in the middle, and that's going to allow us to calculate the cash flow effect over here on the right. In order to finish this worksheet, what we need to do is put the accrual information into our worksheet. We don't know the cash flows yet. We do know the accruals. We're going to figure out the changes in steps 3, 4, and 5, but we need to start out with what we do know, and those are the accruals. So I need to fill this section out, and to do that, I need my net income information. So right over here, I've summarized my income statement, and I'm going to pull this information together. So we're going to start with our sales number. And the next thing we're going to do is we're going to put in bad debt expense. And I know that doesn't really match up. I mean, we're doing a number way up at the top and then we're jumping down to bad debt expense. But we're going to put these together now because ultimately how much cash we get from our customers depends on 3 things. It depends on who I sold to, how much credit I gave them, and who ripped me off. And to get our cash received from customers, I have to put all 3 of those together. So because of that need, later on, we're going to put sales and bad debt expense together right now. And I'm going to go ahead and put in an underline, and I'm going to sum up and get a net value of sales after my bad debt expense. Now that I've got that number, I can go on. And the rest of this is going to match up pretty closely with my income statement. I'm just going to copy these line items over, and I'll link to these inflows. And I can leave them positive because they're revenues. So money's coming in, or revenue is coming in. I'm going to switch to negatives as I go to cost of goods sold, because now it's a cost. So I want that to be a negative number. Cost of goods sold usually has multiple adjustments, so I'm going to leave a line item there. But then I'm going to copy over, let's see, all the way down to, let's say, interest. Interest also usually has a couple of line items. So we'll paste those in. We don't want to put bad debt expense in there twice, so I'm going to delete that, and we'll move these up. There we go. And just don't want that bad debt expense in there more than one time. So let me copy this down. I need to jump again. Got the bad debt expense in there already up at the top. Here we go. And then interest expense also usually has some adjustments, so I'll leave that one some room. In order to make sure I haven't missed anything or added anything I shouldn't have, etc., I need to make sure that it balances out to be equal to my net income, since I'm putting all of my accruals in here. And sure enough, this number matches up with that number, so I'm good to go. I've got this worksheet done. As far as step 2 goes, the cash flow from operations worksheet is done. Now I need to make 2 more worksheets. I need to do one for investing and one for financing. So let me scroll down a bit, where you can see I've done some of this preparation. So this will be my investing activities. And you can see I've put a line item in there already. I'm going to add a subtotal here and call this cash flows from investing activities. And then we need a financing activities. Cash flows, financing activities. These two worksheets, there's nothing special. There's no accrual information. I don't have to gather anything, which is kind of nice. The only thing I need to make sure of is that I leave plenty of room to put in the effects of various transactions. So leave yourself 5, 6, 8, 10, however many lines, both for investing and financing, so that you have plenty of room as you move forward. Now that I've got my 3 worksheets done, I can move on to step number 3, and that is accounting for the special transactions. We listed a whole set of special transactions. We're going to look at each one at a time. We'll do the discussion. We'll walk through the effects, both on cash flows and on the balance sheet, and we'll put them into these worksheets. And on your example template, you've got all of these in one big long list. In order to make sure things show up well on the screen, I've broken it down. We'll do one per screen here, just to make sure that it's easy to see where the numbers are going. That's why yours is going to look a little bit different than mine, but all of the calculations and everything are going to be the same. So let's start with this very first special transaction. During the year, the company paid $2,767,000 to buy land, building, and equipment. And the first thing we want to know is this operating, investing, or financing? Did they purchase equipment? And the purchase of PP&E is investing. The cash effect, what I'm really looking for at this point, is a negative $2,767,000. But I'm not going to stop there, because in step 5, remember, I've got to go back through the balance sheet and see if I've got any balance sheet changes that haven't been accounted for. So as I move forward with step 3, I want to show what I've already looked at with my balance sheet accounts. So let's look at the balance sheet effect in addition to cash. And the one account that's going to change is called land, building, and equipment. And we are increasing that account, land, building, equipment, by $2,767,000. If we were to do the journal entry, we'd have a debit to PP&E, land, building, equipment, and a credit to cash. Now that I've got those numbers, I know both the cash effect and the balance sheet effect, then I can put the cash effect into my worksheet. So we said this was an investing activity. So right over here, I'm going to list cash paid for PP&E. And I'm going to link to this $2,767,000. And you'll see that my numbers are all showing up in red. This is something that I do just so I can keep track of my work. I do all of the step 3 numbers in one color, all of the step 4 numbers in another color, all the step 5 numbers in a different color still, so that if there's a mistake and I don't balance out at the end, it's easy for me to find where to look so that I can make corrections and verify my numbers. So that's why everything you're going to see as we work through step 3 is going to be in red. Now that we've done this first example, let's go ahead to our next special transaction. This time on August 5th, we issued 25,000 shares of common stock for $42 a share. Again, the first question is this operating, investing, or financing? Well, the sale of stock is a financing activity. My cash effect is going to be, let's see, 25,000 shares, $42 a share. So I'm going to have cash coming in, since I'm selling these shares, of $1,050,000. Next, I need to know my balance sheet effects. And there's actually a couple of balance sheet numbers that are going to change. So I'm going to list the balance sheet effects over in this column, but I need a place where I can calculate them. So let's do that right down here. Just like any issuance of stock, I have to break this down between the par value, which goes into the common stock account, and the additional paid in capital. That's above and beyond par value. So to figure that out, I need to go back to my balance sheet and look in my equity section. And you can see right down here, I've got common stock with a $10 par, and then I have some additional paid in capital that I can keep track of as well. So that's what I'm looking for as far as account names, and also that par value number that I need to know so that I can separate what goes into common stock from what will go into additional paid in capital. Now that I know that, the common stock account we'll get 25,000 times 10. That's the par. So 25,000 times 10. And into additional paid-in capital common stock will be the rest of this 1,050,000. So 1,050,000 minus 250, 800,000 will go into additional paid-in capital common stock. So now that I know the numbers, I can make my notes. We're going to have an increase to common stock, 250,000, and an increase to additional paid-in capital common of 800,000. Now that I know the cash effect and the balance sheet effect, I can put this effect into my worksheets. It's financing, so I'm going to put this number down here as cash received from sale of stock, $1,050,000. Again, marked in red to signal that it's from step 3. And I'm going to take a second and save my work. I don't want to lose what I've done. All right, this is a nice place to break. When we come back, we'll continue on adjusting for these special transactions and continue our discussion of how we build a statement of cash flows. We'll see you then. Thanks.